Welcome back for my final morning report analysis video on Thursday, 4th of April with me, Richard Perry, market analyst at Hantec Markets, looking at gold and yet another market that is just sort of forming this consolidation in the last sort of few days, where gold had been under pressure, falling below the long-term pivot line at 1300, looked to be on course for a test of that 1276 to 1280 key support band, just held up in the last couple of days, 1284.70, as that as these momentum indicators just start to sort of tail off in their negative outlook. So I think this is consolidation, but interestingly, I talked previously about this little downtrend, this mini downtrend that we had, and sort of on the brink of breaking that downtrend. You can argue that the hourly chart momentum is increasingly neutral between sort of 60 and 40 on the RSI. MACD lines hovering around neutral. So there is just a lack of direction on gold, and I think that there is a negative bias that you've still got on this chart, given the fact that we're trading below that pivot line again, 1300 to 1310, this pivot band, the long-term band. But at the moment, the support is holding, and whilst that support holds, then the corrective momentum is not going to be taking hold. So that is the key line of the support we need to continue to watch, 1276 to 1280. If that does break, that completes this big head and shoulders top pattern, and it would really put a strain on the recovery on gold. But for now, it is still holding up, and effectively there is still a situation of higher lows in place, but there is still a mild corrective bias, given the RSI failed at 60, sort of moving towards 40 area, MACD lines crossing lower below neutral. So there is a mild negative bias still, but it's not going to be turning decisively negative until that support band is broken, if it is broken in at all. So I wish you good luck in your trading today, and I'll speak to you again tomorrow.